Good morning, and welcome to Market Sunrise. I'm so glad you're here. Let's get you fully briefed on everything moving markets before that opening bell rings. Quick reminder, nothing here is financial advice. Do your own research, talk to a professional. But buckle up, because this is one of the biggest pre-market mornings of the year. Let's jump straight into the U.S. news driving this morning's action. The United States has struck Iran, and the ceasefire has been declared over, sending S&P 500 futures down a full 1% as geopolitical risk reprices across every asset class. Nasdaq 100 futures are leading the pre-market slide, down 1.4%, as growth and tech names bear the brunt of this risk-off move. Washington has reimposed sanctions on Iranian oil, and West Texas Intermediate crude has surged 6.3% overnight to reflect that sudden supply threat. The Fed's June meeting minutes drop at 2 p.m. Eastern today, with the Fed funds rate sitting at 350 to 375. This is the first release of the Warsh era, and traders will parse every word. The Dow closed at a record 52,925 in Monday's session, but futures are pointing down about 0.25% this morning as that geopolitical premium sets in. Continuing with U.S. market benchmarks. The S&P 500 closed yesterday at 7,503 and is looking at roughly a 0.5% decline at the open, as big-cap tech weighs on the broader index. The Nasdaq closed at 25,818 and is down 1.16% in the prior session, as a renewed rout in chip stocks drags the tech-heavy index lower. Small caps aren't escaping either. The Russell 2000 closed at 2,982 and slid 0.9% as the risk-off mood hits the most economically sensitive names. Nvidia fell 2.1% on Tuesday, extending a global chip sell-off that's rattling semiconductor names from Seoul to Santa Clara. The 10-year Treasury yield has climbed to 4.5%, a 2-week high, as the oil spike and geopolitical uncertainty push investors to reprice rate expectations. More key data shaping the macro picture. The U.S. trade deficit ballooned to $77.6 billion in May, underscoring persistent import demand that continues to widen the gap. The ISM Services Index came in at 54, confirming the services sector is still expanding and the economy isn't rolling over despite the headline noise. The dollar index is firming near 100.9 as haven demand lifts the greenback alongside treasuries and gold this morning. The VIX closed Tuesday at 1557, still relatively calm, but with futures down about 1% this morning, there's a volatility bid building beneath the surface, and the Fear and Greed Index at 43 signals investors are nervous but not yet panicking, which means there's plenty of room for a genuine volatility spike if the Iran situation escalates further or those Fed minutes deliver a hawkish surprise. Let's talk deals and catalysts. Big money is moving. Vertex Pharmaceuticals is acquiring Crinetics in an all-cash deal at $85 a share, valuing the biotech at roughly $10 billion in one of the year's largest pharma takeouts. SpaceX has joined the Nasdaq 100 in the fastest inclusion ever, but shares of the tracking vehicle SPCX dropped 7% Tuesday as investors sell the news. Amazon is tapping the debt markets with a massive $25 billion bond sale, one of the largest corporate offerings this year, signaling confidence in its balance sheet firepower. Rivian cratered 18% on Tuesday after announcing a 75 million share offering that massively dilutes existing shareholders. Fuel Cell Energy is down nearly 17% after hours, on a $200 million stock offering that's pressuring the already beaten-down clean energy name. A few more deals and corporate moves to know about. Coty is handing the Gucci beauty license back to parent Kering ahead of schedule, a transition that reshuffles the premium beauty landscape. Amplitech Group has authorized a $10 million share buyback after winding down its ATM program, signaling management believes the stock is undervalued. Interactive Strength is acquiring Stepper and guiding pro forma 2026 revenue above $50 million. A bold target for the connected fitness space. Here's what the analysts are saying this morning. Alphabet has been downgraded on concerns that massive AI capital expenditures could pressure margins. A reminder that spending to win the AI race has a cost. HSBC has upgraded Gilead Sciences to buy with a $155 price target, betting the biotech's pipeline and cash flows are underappreciated at current levels. Freedom Broker has nudged Tesla's price target from $400 to $420 while keeping a hold rating. A modest bump, not a change of conviction. Wedbush has raised Revolution Medicines' target from $165 to $181 with an outperform rating, reflecting growing confidence in the oncology pipeline. UBS has trimmed Medtronic's price target from $90 to $85, maintaining a neutral stance as the medtech giant faces near-term headwinds. Let's go global. Overseas markets are telling a dramatic story today. South Korea's Kospi has crashed 5.35% and officially entered bear market territory, hammered by chip export fears and the geopolitical shock. Japan's Nikkei 225 dropped 2.1% as chip equipment suppliers like Tokyo Electron and Advantest got caught in the semiconductor downdraft. Hong Kong's Hang Seng bucked the global sell-off and rallied 3.2%, lifted by Chinese stimulus hopes and bargain hunting in beaten-down tech names. India's Sensex is sliding roughly 2% as the oil shock hits Asia's third-largest crude importer, right where it hurts, at the pump and on the current account. New Zealand's central bank hiked rates for the first time in 3 years, a hawkish surprise that signals the global fight against inflation is far from over. Across the Atlantic, Europe is feeling the pressure too. Germany's DAX is down 1.1% as the Iran escalation and energy price spike weigh on Europe's export-heavy industrial sector. Shell is bucking the trend, up 3% on Tuesday after raising its second-quarter gas trading outlook. When crude spikes, the oil majors tend to benefit. One earnings report hit the tape overnight. Saratoga Investment missed on earnings, posting 47 cents against a 55-cent estimate on revenue of $30.8 million, and shares are down 4.6% after hours. Let's check in on commodities. Crude oil is the headline act today. WTI crude is surging to $74.83, up 6.3% on the August contract, while Brent has jumped to $78.64, the biggest overnight crude move in months. Natural gas is holding at $3.22 per million BTU after Tuesday's session, relatively quiet compared to the fireworks in the oil complex. Gold is steady near $4,100 an ounce this morning after pulling back 1.4% on Tuesday. The Classic Haven is pausing but hasn't broken down. Here are today's top pre-market gainers, names catching a bid even in this risk-off tape. And on the flip side, here are the names getting hit hardest before the bell. Now let's look at what's on the radar going forward, the dates and events that could move markets. The Iran conflict is the top watch item. The ceasefire has been declared over, and this situation is actively developing, so expect headlines to drive intraday volatility. The FOMC June minutes release at 2 p.m. Eastern today, and this is Kevin Warsh's first as chair. 9 officials lean toward a hike, so the tone could be decisive. July 17th is the deadline for buyers of Iranian oil to wind down purchases under the reimposed sanctions, a hard catalyst for crude markets. The June CPI report lands next Tuesday, July 14th at 8:30 a.m. Eastern, and this oil spike raises the stakes dramatically for that inflation print. Q2 bank earnings season kicks off on July 14th, with JP Morgan, Bank of America, Citi, and Wells Fargo all reporting before the open. The financials will set the tone. A few more items to keep on your calendar. The next FOMC rate decision comes in late July, and with oil surging and inflation expectations shifting, that meeting just got a lot more interesting. The AI capital expenditure discipline debate continues to simmer as investors question whether big tech's massive spending will deliver returns quickly enough. South Korea's chip concentration risk is front and center. The Kospi is now down 20% from its June 19th peak, officially in bear market territory. Here's how I see today setting up. This is a classic risk-off open. U.S.-Iran escalation has crude up roughly 6%. Futures are down about 1%. And the chip complex is still unwinding those peak AI capex fears after Korea's Kospi fell into a bear market. Energy is the natural relative strength pocket, while long-duration tech faces the double headwind of rising yields and fading semiconductor sentiment. The 2 o'clock release of the Fed's June minutes, the first of the Warsh era, with 9 officials leaning toward a hike, is the single biggest scheduled swing factor of the day, and it could set the direction into the close. Let's check in on the crypto market. Bitcoin is holding steady near 63,700, down just 0.1%, showing surprising resilience while equities wobble on the geopolitical shock. Bitcoin ETFs just snapped a 10-day outflow streak with their first net inflow, a subtle but meaningful shift in institutional sentiment worth watching. XRP is outperforming at $1.17, up 2%, as ETF approval momentum gives the token a bid that's decoupling it from the broader market weakness. Solana is up nearly 11% over the past 7 days to 81.33 as the community rallies around the upcoming Alpenglow consensus upgrade. The Trump meme-coin saga continues to deepen, with cumulative investor losses now totaling $3.8 billion, a stark reminder that meme coins are not investments. Here's a quick look at the top movers across the crypto landscape. Crypto is caught in a macro tug-of-war right now. Weak June jobs data revived rate cut hopes, but a hawkish dot plot and this oil-driven inflation shock argue the other way, and today's Fed minutes could settle the near-term direction. Bitcoin holding the low 60s alongside the first ETF inflows in 10 sessions is constructive, and XRP and Solana are showing relative strength on their own catalysts. But make no mistake, an equity risk-off day rarely leaves crypto untouched, so stay nimble. If this briefing helped you walk into today's session sharper and more prepared, hit that subscribe button, drop your take in the comments. This community gets better when you share what you're seeing, and ring that bell so you never miss a morning. Everything you heard today is for informational and educational purposes only. It is not financial advice, so always do your own due diligence before making any investment decisions. Subscribe, and we'll see you right back here tomorrow morning.